Assalamualaikum. Today my group is going to present our assignment about financial accounting and reporting of a sole proprietorships. Before I start the presentations, I'm going to introduce my group members, which is Nur Hanim binti Sayuti, Nazirah binti Nazari, Nur Haslinda binti Zakaria, and me, Nurul Aunimadiha binti Muhammad Rashid. So, I'm going to explain about the background of the business that we have been interviewed. The name of business is Kedai Maju Bakti and the location at number 6 Gerai Runcit, Dalam Pasar, Pasar Besar, Jalan Pasar 35800 Slim River. Kedai Maju Bakti, they provide the needs like food. Kedai Maju Bakti start the business on 26 October 2017. With the purpose is to support family life. The owner of the Kedai Maju Bakti is Muhammad Nur Maslilia Amani bin Abdullah, but now the business is handled by Sabri bin Kamaruddin. They start the business with 30,000 capital, which is from own savings and family member assistance. Kedai Maju Bakti operations operate every day. And they only have one worker. Their regular customer is Mr. Jihan, owner of Nasi Lemak stations. Kedai Maju Bakti has many suppliers, for example, Hub Seng Trending and High Trending. They have rug, grilling machine, table, chair, freezer and cash register for non-current asset with the value 1,694. The profit they earn for 1 month around 35,000 to 39,000, and their expense on the worker wages is around 12,000.
Next, I will explain about the characteristic of Kedai Maju Bakti. Kedai Maju Bakti is registered in the Companies Commission of Malaysia, which known as Suruhanjaya Syarikat Malaysia. Kedai Maju Bakti is a sole proprietorship with carried on for the purpose of gain and were governed under the Registration of Business Act 1956. This business has been registered in 26 October 2017 until 11 November 2022 at Ipoh by Muhammad Nur Maslami bin Abdullah. Besides that, the business handled by the owner itself, which is Muhammad Nur Maslami bin Abdullah. This means it is easy to set up and less costly among the others form of ownership. He is responsible for all the things relating to the business. He himself bear all the risk and organize the whole business. On the closure of business, he is personally liable for all gains and losses. Through proper management, he manages all things individually. He also controls all effort and resources related to the business activity, and he also takes better decisions for managing the challenges and opportunity for enhancing his business. He also free to run the business as he thinks the best and is not answerable to a boss. The third characteristic is the owner has unlimited liability. The sole proprietorship is personally liable for debts of the business, so that he has unlimited liability to repay owning or debts of the business. For example, if the business incurs debt resulting from a warranty claim, then he will be held responsible for those debts. It means that at the time of loss, if he fails to pay his debts, then his personal property is sold to pay the liabilities of his creditors. If we consider, unlimited liability is also a huge disadvantage for him. Along with the profits earned by the owner, the primary goal of the business is usually to obtain the highest possible level of profits through the production and sales of goods and services. It is a return on investment. Profit is required for survival, growth, and expansion of the business. It is clear that every business operates to earn profits. Also, profit is required to create economic growth. It means whatever profits earned from the individual trader business, it totally belongs to him, which the owner of the business. Similarly, if there is a loss in a sole proprietorship business, then he too will have to face it. On top of that, Kedai Maju Bakti provides source of income to the society. For instance, he hires employees as cashier to deliver the goods and others. His business leading to the growth of the economy. Additionally, his business helps to fulfill the unemployment criteria and also increase the engagements of the business, such as enhancing the growth, productivity, labor facility, sales, community, and so on. This future point is very helpful to make his business efficient and effective. Other than that, for this business, capital is come from his personal savings and families. The capital volume is very limited in this business because his business size is very small and there is no factor of continuity also. Normally, a sole proprietorship business is require a small amount of capital to start with compared to other forms of business entities. Moreover, the business also has risks and uncertainties. Risk is defined as the effect of uncertainty arising on the objective of the business. Risk is associated with every business. For instance, his business is exposed to insurable risk, which means it is predictable. So there are some predictable factors that are controllable to some extent, such as taxes, change in volume of expected sales, overhead costs of supplies and equipment, and salaries. Hence, the calculation and management of the risk is vital to ensure the success of a business. Insurance and risk management help in minimize the risk associated with the business. Next, he's free to select his business. He can select any business according to his abilities and will and can make any changes in his selections of business when required. The last characteristic for his business is social activity. His business has some responsibility towards the society, and in turn it needs the support of various social groups like investors, employees, customers, and creditors. By making goods available to various sections of the society, his business performs an important social functions and meets social needs.
There are three main elements in the equity equation, which is assets, liabilities, and owner's equity. The first element in the equity equation is assets. Assets are resources owned by a business and are provide present and future economic benefit in the business. Assets can be classified into non-current asset and current asset. Non-current assets are resources owned by a business for a long period, usually more than 12 months. In this business, the owner use furniture and fittings, cash register, grinding machine, and rack for the use in the business. The total amount of non-current asset in this business is 1,674 ringgit Malaysia. Next is current asset, which is current asset is asset that can be converted into cash within 12 months or less. In this business, has closing stocks, deposits, trade debtors, and cash in hand as their current asset. The total of these items are 40,972 ringgit Malaysia as their current asset. The second element in equity equation is liabilities, which is it shows the existing debt and financial obligation of the business to outsiders. They can be classified as non-current liabilities and current liabilities. But in this business, there are no liabilities in this business as Iris used their own money and used money from their family member to start his own business. The last element in equity equation is owner's equity. Owner's equity represents the amount of capital invested by the owner into the business and the profit derived from the business activities. It consists of capital, revenue, expenses, and drawing. Capital is the amount of money on asset invested by the owner in the business. The business had total 30,000 ringgit capital, which is from the owner's saving money and from the family members. Next is drawing. The owner sometimes withdraw cash for the use of paying their own personal motorcycle loan. The owner also take out assets such as inventories like Maggi and onion for personal use during accounting period. The total of drawing for the business is 42,000 ringgit. Okay, next is revenue. Revenue represents the monetary value of goods and services that have been supplied to the customer. They can be classified as operating revenues and operating revenues. The total of operating revenues in this business is 513,289 ringgit Malaysia from the cash sales. Next are expenses. Expenses represent the cost of asset use or service use in generating revenues. Expenses can be classified as operating expenses and non-operating expenses. The item in operating expenses in this business is electricity, shop rental, worker wage, telephone bills, and purchase. The total of this item is 475,732 ringgit Malaysia. While non-operating expenses are expenses that are not directly involved in day-to-day transaction. The item of non-operating expenses business is accounting fees, depreciation, fire and extinguisher, MDTM license, printing and stationery, and also waiting machine service. The total of non-operating expenses are 1,804 ringgit. it makes the total of these two expenses is 477,736 ringgit.
The recording process of the business. First is source document. Owner uses various source documents such as invoices and cash bills. The second is journal. Owner did not record transactions into an appropriate journal. The third is ledger. Owner did not record transactions in a ledger. Then is trial balance. Owner did not prepare any trial balance. Next is adjusted entries. Owner did not make any adjusting entries for periodically recorded transactions. Then adjusted trial balance. Owner did not prepare an adjusted trial balance for accounts. After that is financial statement. Owner did prepare the financial statements such as the statement of profit or loss and the statement of financial position. The last one is reversing entries. Owner did not perform reversing entries. The strengths of the business are: 1. The owner records all transactions that occur in the business. The second one is there is a specific person in charge of reorganizing the business transactions records. Number 3, the owner keeps the business source documents properly. The weaknesses of the business are: number 1 is the owner do not have proper business recording process. Number 2, the owner did not record business transactions using proper ways such as using accounting software or journal and ledger books. Number 3 is the owner lacks accounting knowledge.